Welcome back to Frank Abdo. Why are the markets headed to their all-time highs and beyond? I can show you on a chart that I'm going to do on my computer and show you exactly why I believe that the Dow is going to continue to move higher. And I'm going to show you another chart on oil, why temporarily it may be reaching its limit for now. We're looking at oil prices at around $33 a barrel as I speak. They probably will pull back to the $25 range. I'm going to show you how you can profit from that if you believe I'm right. But make no mistake, oil is headed north of $40 a barrel. On the Dow Industrials, the most important factor is never fight the Federal Reserve. Never fight the Fed is an old saying, and it's true. Why is that? And what is the Fed doing exactly that's going to keep this market robust and rolling along? What the Federal Reserve is going to do and is doing is pump money into the system, into the economy. They're going to invest in assets. What do I mean by that? The Federal Reserve will, for example, put into the accounts of large banks like Bank of America, Goldman, Wells Fargo, and so on, $1 trillion, say. Say they put $1 trillion in each one of those accounts. Those accounts will have that $1 trillion. What do they do with it? They lend it. And the Federal Reserve, even though they put the money in that bank, they'll credit the bank for the $1 trillion they put in it. They'll credit them for it. It's not the bank's money. The Fed is not holding them responsible to pay that money back to the Fed. They're giving it to them to lend out. So presumably, the banks will find borrowers such as small businesses, medium businesses, big businesses, individuals, you name it, they're gonna put that money out there because it's too much money just to be sitting in a bank doing nothing. And that's what we're seeing, and that's why the economy is being supported, because companies can support their employees when they're not working more than they normally could have, plus all the unemployment benefits that are now being given to the unemployed is keeping this market robust and headed higher. Don't fight the Fed. Not my line. That's a line that goes back from the days the Fed started doing their nonsense. Well, it's not so much nonsense, is it really? It's what government's supposed to do. It's government's supposed to keep things moving. Over to the charts where I'll show you oil and I will show you the Dow Industrial chart and how to make money in the oil market. Here we go. As discussed earlier, I'd like to point out a few things that are important in predicting market direction. Here we're going to start with the Dow Industrial Average. The Dow Industrial Average had this massive drop due to the virus scare, and it appears as though the scare has been mitigated by the Federal Reserve. There's an old saying in the investment world, don't fight the Fed. And that is true today as it has always been. The Fed is loosening the money up like mad. And as they loosen money up, then that goes into the banking system for that money to be lent out. And as a result of that, businesses can do what's necessary to keep going. We have seen this play out right here. Just let me give you an idea what I'm talking about. I'm going to come over here, get a little drawing tool. Okay, so here we were. Look at this huge drop in the market from 30,000, nearly 30,000 to 18,000. I mean, that's dramatic as heck, right? So now look and see what's happened. We're here, we're at almost 25,000 or so. Yeah, actually we're at 25.1. But the market is going to reclaim this level right here. The question is, what happens between now and then? It appears to me that the market could settle back down some, but I don't believe that's going to happen right away. And the reason that I believe that it's not going to happen right away is the relative strength has not gotten out of hand. If it gets over this 70 level right here, then we're going to see it maybe could then take a little breather. It's not there, and therefore I believe that the market has more room to run. Let's take a look at one more thing like I talked about earlier, and that's the oil index. Oil is headed higher, folks, but in the short run, we could see a pullback in oil. Why do I say that? Here we are. It came off a bottom of $6.50, as you can see, and now it's trading at around $32.57 a barrel. To remind you, a barrel is 42 gallons of oil. At $6.50, that's about 15 cents a gallon. At $33, that's, I'll do the math here. I'll do the math for you. At $33, my little calculator comes up, $33 divided by 42, that gives us 78 to 80 cents a gallon. And, you know, that is about halfway back from its high. In order for oil to make sense to American drillers, oil has to be north of $40. It has to be above this line right here. Whoops, let me get my tool. I thought I had it actually. It has to be above this line right here, this $40 level. However, right now, and it will get there. However, at this moment in time, we're seeing an extended run in the oil. It ran from here to here. That's a big deal. I mean, if you look at 15 cents a gallon versus, what did I say, 33 divided by the 42, 79 cents, divide the 79 cents by the 15 cents, and it has had a five-bagger move. It's moved up fivefold since the crush back in May or the end of April. Profit takers are always going to be in the game, always. They got a big move, they recovered a lot of their money, and they're going to take those profits. And when that happens, I believe that this market is going to head back down to about, I'm just going to pick a point and say right about here at about 24 or so dollars a barrel. When that happens, the profit takers, because Wall Street doesn't like giving the sellers the top of the market, they like to drag it down some. So that's what they're going to do here. They're going to drag this thing down. The relative strength is going to drop. The sellers are going to get their money, but they're not going to get it at the top. They're going to get it right here. And then I believe we will start to see a move back up into this $40 level. Okay, how do we play that? So if we believe that the oil market is going to pull back, and right now it's trading at about $33 a barrel, if we believe that there's going to be a pullback to, say, the $26 level, say $26, that means that the way to play it, and the only way to play it actually, is to come in and buy a put. You buy a put, a $33, you're buying a put, the right to put the oil price at 33 to someone at a lower price. You're going to pay $2.23 for that, or $2.24 as it just clicked in. And if I'm right, and the oil does drop to $26, then you're going to see that price, you can cover that price for 64 cents right there. That's about what you're going to get for it. So you have sold it for $2.22. When you sell something, you have to buy it back. So when you buy it back, you're going to spend 64 cents to get it back. So the profit there is going to be $2 and let's say 25 cents minus 64 cents. If goes that way. That means you're going to make $1.61 on a $2.25 trade. So what percentage move is that? That's a 71% move. That's a pretty good bet. Now, I'd like to show you one other thing, one other reason why I believe the market is in good shape. First off, let's get rid of this trade right here so we don't get confused. Here's the Dow Industrials. If we come over here and take a look at the Dow Industrials, we're going to see that the trend since it hit rock bottom on the panic selling in the March-April timeframe, it has made a sharp comeback. It wants to retest this high right here. It wants to do that. It's not there yet, but it wants to do that. It's trading right now at about 4,000 points below that level. There's no way to trade the Dow as a whole. I'm just pointing out that there's still room to run. What tells me that? What tells me that is basically three indicators. Relative strength. How strong is the buying? And we look at this level right here as the overbought level, 70. The number 70 on this scale is an overbought. Means the market's overbought. It's too pricey. If we come back here and we see right here, it got overbought, didn't it? It got overbought. It got overbought. It got overbought. What happens when it gets overbought doesn't mean it's going to drop instantly, but it does mean that it can't stay there forever. And certainly it didn't. And so we look at a market right here, and it did come down into the ice cold market, the ice cold blue market, which is right here. Can it stay ice cold forever? No. And that's where we are right now. It's coming out of the iceberg, out of the ice age, and it's starting to heat back up. It's not fully heated yet, but that will tell us when it is. The other indicator that tells us that is that when the buying pressure dries up. Right now we can see here in this past right here, it lines up with this, buying pressure was strong and it remains strong. Weakened a bit right here, but nothing of any consequence, and it's starting to build its strength back up here again. I believe the market has still got room to run here. And last but not least is this MACD exponential mover. So long as it stays above this zero line, which is in purple, so long as it stays above that, then we're in a pretty consistently solid position. If it breaks below it, as it broke below it here, that got a lot weaker and the world caved in on us, right? Right now we're in the sort of the sweet spot, and it can stay there for quite a while, as demonstrated back here, right? So the indicators continue to point to higher markets. It doesn't matter whether we're looking at the Dow Industrials or whether we're looking at the NASDAQ. NASDAQ had the same event happen and crashed, and now the buyers are taking it back up again. Well, that's it for now. Comment, ask any questions you would like, and subscribe so you don't miss the next episode of Frank Abdo and Winning with Your Investments. Bye for now.